Greetings, everyone. We are back in chapter 8, and I hope you did your homework. First thing I want to do today is jump right back into chapter 8 and internal controls. Okay. The homework that I had you do tonight was, or last time, was a bank reconciliation. Okay. Once again, if you remember nothing else from this class, remember that you should do a bank reconciliation, okay? Now, a bank reconciliation, like we talked about in our last class period, a bank reconciliation is not the same thing as going online and looking through your activity and seeing if everything looks good, okay? There's lots of errors that you can miss and will miss that way, okay? The other thing is the bank reconciliation. For those of you who ever own or co-own a business, the bank reconciliation is one of the strongest internal controls that we have. You should do your own bank rec as a bank owner. Matter of fact, have your bank statement sent to your home so that the other people never even get the chance to look at it. Okay? True story. One of my relatives works at a company, and they had an $80,000 theft over a number of years by their chief controller. And what she was doing was, have you ever got a bank statement and they give you the bank statement and then behind it is the detail? You see what I'm saying? And it's like all these little checks. Well, she was writing a check to herself, okay? A check to herself. When it came in, she had custody of the bank statement, and what she would do is she would take that piece of white paper that had all those little checks on it, and she would cut out that check that had her name written on it. You see what I'm saying? She would take another check from another statement, and she pasted it over and then photocopied, and then when it was all done, it looked like the regular thing. You see what I'm saying? Mm-hmm. Now, in this chapter, I'm always fearing I'm giving my students great ideas, okay? So I hope you're not thinking of them that way. But what I'm saying is, she even left the bank statements out for people to look at. Nobody ever did. But she had altered them. Do you see what I'm saying? Okay? So, and if she'd have been smart, what I would have done, and this is what I would have done, is I would have figured out before I wrote myself the check, I would have figured out which check I was going to put in its place. Do you see what I'm saying? So if I was going to take a check for $3,250 to cover up eventually the check I wrote to myself, the check I would write to myself would be for $3,250. Why does that matter? Well, that way if you're going through the detail versus the statement, just real quick looking for amounts, it would match up everything. You see what I'm saying? What's the chances that somebody would look at and notice that the amounts, all the amounts, but one of the check numbers was different? And then they might even just say, oh, that's probably bank error. See what I'm saying? Now, if that bank statement would have been somewhere else, would have been sent somewhere else, she would not have had access to do that. Make sense? Now, of course, a lot of banks anymore, they don't even send bank statements. You just go to the bank site and you download it. Okay? But do your bank rec. The majority of fraud that I have either heard about or helped discover would not have occurred had they not been able to do the bank rec and have custody of the assets. Okay? So the bank rec is a very, very important means to preventing that. Okay? All right, let's take a look at exercise 8.8 and exercise 8.9. Okay? Now, these two kind of went together. They wanted you to do a bank rec, and then they wanted you to do some journal entries after it, didn't they? Yep. Okay? Okay, exercise 8.8, exercise 8.9. Page 344 and 345. Now, I'm not going to read through the problem. Hopefully you've done that. But let's go ahead and cut on over to the screen, and let's go ahead and show the answer. Let's just kind of work it on the screen, okay? Now, first of all, I would recommend that you title this thing up. Even though it's not a financial statement that we're releasing to the public, you still want to title it up, because this should be a record that you keep in your business internally that anybody can look at, and you want it to make sense of what it is. So, and then let's date it appropriate. Is that right? Whoops, that's not what we want. Let's see if that sticks. That sticks. Okay. All right, the first thing we do is we write our bank statement balance, or sometimes we call that the balance per bank. And we're going to write our balance per books, or the GL, over here. Okay? What's our balance per the bank?
15,382.
15,382. What's our balance per the book? 15671.
15671.
Is that right?
Yep.
Okay. And let me go ahead and add a column there to make this a little more clear between what is what. Okay? All right. Now we have the first item they talk about is outstanding checks, correct? Now which side does that go on? You know, I always ask, who doesn't know about this yet? The bank doesn't, right? So let's say less outstanding checks. And what were the amount of the outstanding checks? 2,700. Okay? All right, the next item they talk about is there was a June 30 bank statement debit memo for $65 for bank services. Okay? So who doesn't know about that yet? Us.
The book.
Right, the books. So let's say less
55.
bank service charge.
Yeah, because I didn't know what I put bank fee.
Bank fee is fine too. And how much was that? $65? Okay. All right. Next thing they tell us is check number 919 listed with the canceled checks was correctly drawn for $489 in payment of a utility bill on June 15th. Austin Clinic mistakenly recorded it with a debit to utilities expense and a credit in the amount of $498. Okay. All right. So cut to me real quick. What we did is the actual payment was $489, right? That's the true amount and what cleared. But we recorded it at $498 by mistake, didn't we? So what do we have to do to this side to get to? We have to add it.
Add $498.
We have we have to add $9,
Well,
right?
I did it differently.
Did you do like add one and totally? Yeah, you could. The net was probably the same.
Yeah, the difference is $9.
But going back to this, we would say add book error, and you might even say check 919. Okay? That way when somebody sees that, they're going to know, oh, what is that? Okay? Okay, and how much do we add? What's the net amount? We need to add 9 back. Is that correct? All right. And then there's one more thing that they tell us. The June 30 cash receipts of 2933 were placed in the bank's night depository after banking hours and were not on the June 30 bank statement. Okay. So who doesn't know about this yet, at least as of the bank rec date? The bank. And is this an add or subtract? This is an add. This is a deposit in transit. Deposit in transit. And how much was it? Okay. All right. So now and this should be, is this the same number over here? Yeah. Okay. All right. Well, these numbers equal, don't they? These numbers equal, correct? Now let's go ahead and give those a title. This would be the adjusted bank balance. And this would be the adjusted book balance. Okay? But these equal. Okay? So we have now performed a successful bank reconciliation. Okay? Now, which of these which side of this requires that we make journal entries? This side, correct? The book side. We have to make 2 journal entries, okay? Now here we are adding $9 to cash, and here we are subtracting $65 from cash, correct? Well, how do we add to cash? Do we debit it or credit it? We debit it. How do we subtract from cash? We credit it. Okay, so some of these journal entries, or a good part of these journal entries should write themselves, okay? Let's put it right here. Okay, we debit cash because of that $9 up there. And what do we credit? We'll look back at our original entry. No? The book error.
Oh, yeah, that's utilities.
We have to decrease utility expense, right? Because we had originally debited it for too much. $9 too much. Correct? So that's our first journal entry. Our second one is up here. It's a deduction from cash. Okay? So we have to credit cash for $65. And what do we debit? This is in regards to the bank service charge. So you could just say like bank fees expense. There's some wiggle room in there as far as what you'd call it. Okay. Ran out of room there a little bit. It's called bank expense. Okay? All right. So here are your journal entries that you make in regards to the bank rec up above. All right? Make sense? Okay. All right. Any questions on that? Can I see this real quick, Gil? Yeah. Any questions on, that was the only homework I assigned, was it not? Yep. Exercise 8.8, exercise 8.9. Okay. What I'd like to do now is I want you to look in your blue book. Okay. And there should be a Chapter 8 bank reconciliation for Farber. For Farber Inc. Make sense? You finding that? So I want to take a few minutes while they play that snazzy JCCC music, and let's go ahead and do Farber, okay? And let's go ahead and do the journal entries that will be needed after that as well, okay? All right, so let's do Farber. All right, we are back. Let's take a look at the answer. And actually, by coincidence, this one was very similar, was it not? I think the book air was for the exact same amounts, wasn't it? Yeah. Okay. All right. Oh, I got to turn the TV on for you guys up here. Let's see if I can. All right. Did you guys do the, this is great that this can be captured on TV, me struggling with the television, just like at home, okay? All right. Let's take a look at that and see if that is the answer that you got. The journal entries are down here below the line, and the bank rec is above. Is that what you all got? Okay. Okay, great. Great. Any questions on that? Okay. And it's kind of nice because it has a self-checking mechanism and these two numbers have to equal, right? Okay. All right. I want to actually do another one in class that's a little bit more complicated, especially since that one was so similar. So what I want you to do is I want you to flip the page and I want you to do Betsy Doe. Okay? Now, let's take a look at Betsy Doe. You should have something like this, but I need to add something to it here. Okay? What I want you to do, and does everybody have this in their blue books? Okay, the only thing I want to add is down here on item 5, I want you to assume that that check was written in regards to rent expense. Assume that the check that they're talking about in item number 5 is in regards to rent expense. Okay? Are you with me? Because what I want to do now is I want you to do the bank reconciliation and I want you to do the journal entries. Okay? This one's a little harder. It's going to take a little longer. Okay? But you need that information in regards to it being for rent expense if you want to do your JEs. Okay? So let's do Betsy Doe Company, bank reconciliation. Go ahead and do the bank reconciliation and do the journal entries. All right? I want to get some good practice on this today because I feel this is very important. Okay, we'll see you in a little bit. All right, let's take a look at this. Let's go over to the screen. This one is a little bit more detailed, wasn't it? Take a look at that. This one, of course, had a deposits in transit amount and an outstanding checks. We've done those. We know how to handle those. This had a bank service charge. We know how to handle that. A couple new things that it had is one service that banks can do for you is they can collect on a note. Okay, so here they collected on a note receivable. Okay, so that was an addition to our cash. Now, chances are they charged us a little extra fee, and that's down in the bank service charge. So maybe normally they charge us $20 bank service charge, but this month they charged us $25 because they did some work on collecting that note receivable. But that's in addition to our cash. Okay. We also had another book error that we had to take into account, but we've handled those before. We also here have a bounced check. Okay. And what had happened is when we received this check from Frank Oney, I think his name was, we had originally increased our cash, assuming that that check would clear, and it didn't, so we need to back that off of our books, don't we? We need to back that off, okay? So that is the bank rec. It reconciles exactly, doesn't it, between these two amounts, okay? Now we know we're going to have a debit to cash for 200, a debit to cash for 18, a credit to cash for 120, another credit to cash for 25 for the JEs, correct? So here's the journal entries that I got. Can you see why I needed to tell you rent expense, or you wouldn't have known what to credit there? Okay. And I just did these now. Does that look right? Is that what y'all got?
Yeah, we weren't sure what to debit the cash on 120.
On the 120, that's a good question. Well, we thought this deadbeat had paid us, right? But he didn't. Okay? So what we do is we have to set that receivable back up again because he still owes us the money, the deadbeat, right? As a matter of fact, some companies, what they might do is set up that receivable for something extra. Okay? What they might do, take a look at this. Let's say we're going to charge him an extra $20. An extra $20 because his check bounced. Okay? Well, what we would do is this. We would set that accounts receivable up for 140. Well, that doesn't balance, so what would we credit for 20? Maybe some sort of miscellaneous revenue account that we set up for when people...
Late fee?
Yeah, or late fee. That's probably better description. Late fee revenue. Okay. Now, it doesn't say we do that, so I'm going to go ahead and back that back out.
So we don't include the $10 charge for the insufficient.
No, that was automatically added in with the $25.
I know, but we wouldn't charge.
Oh, I see what you're saying. What you're saying, Keeper, is in item C in number 4, it says $25 for its service. This includes the $10 fee. Yeah. So that's already taken into account in the $25.
So
You wouldn't do it. It's already counted in here. Okay. But what we might do is if we wanted to do what we just did, is pass that on to the customer. We could do that. And we might even do a little bit more. So, okay? Make sense? All right. Okay. All right, we have a few more minutes, and so what I want to do real quick is talk over the very last slide of the PowerPoint presentation. And that is in regards to day sales uncollected, okay? All right, day sales uncollected, and you can read about this in your book. It's at the very end of the chapter. It's the amount of time that's going to pass before we receive cash from our credit sales. Okay? Now, do we want this number to be high or do we want this number to be low? We want it to be low. We want to have a fast cash receipt time from our receivables. We don't want to be in the situation where people are paying slow, we're cash poor. Okay? So the way you calculate that is you take your AR divide it by your net sales, take it times 365, and that gives you your days sales uncollected. Okay? You can read about that a little bit more in your book. This one's not too difficult to one, but I like to at least expose you guys to these things. Okay? So the homework that I want you to do, we're going to start on chapter 9 next time, but the homework that I want you to do for the next period is on the screen. Those 3 quick studies and that exercise, and then we will be done with chapter 8. Okay? All right, guys, we'll see you. Have a good one.